Welcome back to 7-Minute Options. Today I'm going to be managing a position in Tesla and opening two new positions. So the first one I want to take a look at here is EWZ. EWZ is the Brazil ETF. It's got more than $7 billion under management. It has a bunch of shares from mid and large size companies from Brazil. And it's a fairly stable one. As you can see here, it's been moving more or less sideways over the past 6 months or so. A little bit of a dip here and there, but this one I sell strangles against frequently. But today I'm not going to sell a strangle yet. So what I'm going to do here is what I noticed that there was a bit of a quick jump upwards here in the last few days. And as it's jumping upward, the IVR is picking up a little bit. The RSI was quite high. And so what I'm going to do now is instead of opening a strangle like I usually do, I'm just going to sell a naked call. And then I'm going to wait for it to come back down in the next few days like it should. And then when it has come down, then I'll sell a naked put against it. So I don't want to sell a strangle right now because then the lower leg might end up here, which is quite easy for it to retrace to. But I'm definitely expecting a retracement here in the next 5 to 10 days. And so I'm going to sell the naked call first, wait for it to come back. And then maybe in 5 or 10 days if this moves back, I'll sell the naked put against it. Because at that point, it'll be very little additional buying power, if any, to sell a naked put once the naked call is already open. So let's take a quick look here. Let's look at 43 days away is the July expiration, and right now it's around 40. So usually I like to go to the 20 delta, but because this is already very high, the RSI is very high, it was an unusually large move up. I'm actually comfortable going up to the 30 delta level, and so right now it's at trading for 40 and it's already starting to pull back. You know what? I'm going to sell this at, let's see, if I sell it at 43, that's got 3,000 people in there. I like to stay, like in this case, I want to stay away from like the 42.5 or 43.5 just because there's nobody in those. But this one here, this has a daily volume of 63,000. This is a very, very well traded liquid one. It's the market's 4 cents wide. I feel pretty good selling this one. Looking at the chart here, the 43, it actually puts me above this chart. So there's 42.90. It's just at the upper limit of the screen here. That would be an all-time high, or at least a high in a year-long high. It's at yearly highs right now, and this would need to move up another full point, or like another 2 or 3%, right? Which I think is a pretty safe bet. So I feel pretty good about this one. I'm going to open this, hopefully get 56 credit for it. Come on. Waiting for this little slider to move back. No. Okay, maybe I can get behind it. There we go. Okay. So hopefully you're going to get filled at 56. If not, I might have to move down to 55. But I feel pretty good about that one. I'm going to be watching it over the next few days to open the naked put against it. All right. So that's that one. The other one that I had here was ARKK. We recently had a position in ARKK, and then we closed that for a profit. Then right now, at 43 days out, this was the position that I found last night. So looking at ARKK, I'm actually going to sell a strangle in this. And again, the only reason I like selling strangles like this is because it's a fund. It's a large fund. I'm not worried about very large motion, like movements, either to the plus or the downside. This is not any kind of a meme stock. ARKK is also a very large fund. And so if I take a look at this one here, quite a bit of volume and only a 5 cent wide market here in the 90 put and the 130 call. And if I look at it on the chart, this is 90 right over here. So we bounced off 97 about 2 weeks ago, and it's coming down a little bit now, which is fine. And then the upper one here, let's see, where's the other one here? The 130. The 130 would be right about there. Let me put that one in there just so it's visual. There you go. That's the 130 price level right there. And going to make it a bit wider. Going to make it exactly 130. And there we go. And that's it. And again, this is outside the expected move right now. The expected move is right here. And I'm going to collect 192 in credit for the strangle. Now, I could be moving it closer, right? I'm only at the 12 delta here and the 10 delta here. Because you know what? I'm okay with $200. Look at this $200. I'm going to give up $1,000 of buying power, but I'm going to get 7 theta. That's absolutely amazing. I'm going to get 7 theta for this, and I'm very happy with that 7 theta. I could be moving this closer. Like if I move it, down to the 20 delta level, I could be getting almost twice as much money. But then it's a much higher likelihood that one of those two will get challenged, or I need to roll or whatever, go inverted, which I hate doing. So actually, I feel pretty good about this. I don't want to get challenged on this. I'm happy with the 192 credit and the 7 theta in exchange for $1,000 buying power. So yeah, let's see if this gets filled. And again, this little pop-up thing keeps popping up here and interferes with my buttons. There we go. Send the order. Yep, and let's see if that gets filled. And I might need to move down to $1.91 or $1.90. Again, because the markets are 5 cents wide here in the option that I want to trade, it's very sometimes difficult to hit the midpoint that the system calculates, right? So the 192 you saw there, it's based on the midpoint. Sometimes you don't get the midpoint, right? If it's 5 cents wide, I might need to give up a few cents here or a few cents there. So this might only get filled at $1.90 or maybe even $1.88. I'll still take it at $1.88. Again, not the ideal trade. You can see the IVR is not particularly high, but it is at 33, so I'm happy with that. And the RSI is right in the middle, which is perfect for a delta neutral trade. I don't want this to go crazy low or crazy high. I just want it to bounce around a little bit. And let's see where this one's going to go. Then the other position I was looking at today, which I already have open, is the Tesla one. So I have a put spread in Tesla, right? I sold the 580, bought the 570, and I collected $157 in premium. And what happened with Tesla, as you can see, that's the line there. That's my short strike at 580. And it got challenged. I was patient. I waited it out. It moved back. I thought I was in the clear, and now Tesla's moving up against it. It's still out of the money, so I'm good. However, it's just I'm still not making money on it. Even when it was up here for a few days, went sideways, there was too much time premium in there, too much volatility. I wasn't in a profitable situation. The problem I have now is this position here, right? Now I'm 15 days away to expiration. Both are out of the money, so I can probably roll this right now for a profit because none of these have been breached. So I'm going to kick this out to July and pick up hopefully $70 only because that will give me more time, right? Because right now, if Tesla drops again to like 550, 560, like it did about 10 days ago, I'm worried I won't have enough time for it to pull back. But if I give myself another 30 days, right, it'll put me into the 42, 43 days to expiration time frame. It's going to give me a chance for this to come back. So let's see what I can get for this thing. It's saying I can get 90. I'm going to, same thing. I might have to move this down a little bit, but if this fills for 91, I'll pick up another $90. Oh, I already have a position on this. Come on. I have I have the GTC. I'm hoping to sell. I'm hoping to buy it back for $75, even though it's trading for 317 right now. I like to set up these GTC orders when I open the position, so I got to close that. I can't have two different orders at the same time. So now I can roll the expiration. Okay, now it's saying 87. Now it's saying 90. Okay, it's bouncing all over the place, but whatever. Let's see what this gets filled at. I'm going to be moving this down penny by penny throughout the day, and hopefully I'll get this filled. Whether I get it filled for 96 or 95 or 92, I'm going to be moving this down throughout the day to get that filled. So yeah, so those are the positions I put on today, and let's see where we are tomorrow. All right, that's 7 minutes. Thanks.